Good morning, everyone. This is Ankit Agrawal. Under this session of Business Analytics and Data Visualization, we will cover Chapter 4, which is Economic and Analytical Foundation for Business. So first, we will see a scenario in which you can imagine yourself as an analytic manager at Urban Threads. This is a mid-size online clothing retailer, and this is the month of October, and you need to set price for winter jackets as winter is coming, so you need to fix price of winter jackets. Last year you raised price by 10%, but the sales dropped by 25%. So this means if we increase the price by 10%, then there may be chances of decrement in sales by 25%, right? This year, your supplier is increasing cost by 8%. Now, one more thing is added, cost is increased by 8%. If you raise price again, will customer flee? If you don't, profit will shrink. So this is the scenario. So in this scenario, there are three things. First thing is cost. Second thing is pricing. And third thing is dropping off customer. There are three things. So as per previous data, we have these two things. Now current situation is increasing price of raw material as supplier. So as price is totally based on cost. This is totally based on cost. So if cost increases by 8%, so naturally you need to increase price also. But there are multiple competitors, multiple substitute are there. So we need to fix the price at optimum value. So that we can retain all the customers. So your CFO demands a data-driven answer by Friday. And what you do? So this is an economic, financial, and analytical problem. So how we will solve this problem with the help of economic, financial, and analytical. So we will see all these parameters in this lecture. So first, in introduction part, we will see all these three parameters. First is economic, second is finance, and third is analytics. So first we are focusing on economics part. So focuses on the study of scarce resources, incentives, and market mechanism. Basically, this is the combination of three things: scarce resources, incentives, and market mechanism. So first we will talk about scarce resources. Scarce resources means limited resources. Limited resources. Just like in the situation of world war, there is shortage of crude oil or petroleum, right? So these are we can consider as scarce resources. And substitute of these scarce resources are biofuel or biogas. And now the second term is incentives. Incentives means if biofuel increases, biofuel price increases, then in that situation the traveling cost also increasing. This is also increasing. So incentive means there may be some discounts, there may be some additional tax we can say, right? So these kind of terms comes under this incentives. And market mechanism just like sometimes price increases, demand also increases, and sometimes if price decreases, price increases, then demand decreases. So these things comes under this market mechanism. So it enables firm to analyze demand, supply, cost structure, and competitive behavior. So basically we can analyze demand, supply, or there is we can create balance between supply and demand. And cost structure is very important. If we are producing any biofuel, suppose we are producing any fuel or biofuel, so in case of biofuel we need to consider multiple types of cost. First we will consider collection cost of raw material, biomass. Second, we can consider transportation cost between multiple echelons. Multiple echelons means first we will collect biomass from fields, then we will collect collection point and this transport to biorefinery and then a retailer or petrol pump. So in this whole process we will see multiple things, multiple types of cost. First is collection cost. Second, between all the echelons, we will consider transportation cost. Other than this, production cost we need to incur, inventory holding cost we need to incur, sometimes advertisement cost also some cases. So all these cost comes under this cost structure. And competitive behavior. Competitive behavior, just like behavior of competitors, if price increases of suppose biofuel, price increases of fuel, then different biofuels are available, different companies are suppose available. So competitors, some competitors may give 89 rupees per liter, some may give 87 rupees per liter, and some may give 82 rupees liter. So this kind of behavior considered as competitive behavior. Now, for example, a retailer forecasting seasonal demand for winter cloth using economic principle to anticipate sales fluctuations. In this case, matter of sales forecasting, or we can say demand forecasting. So in winter season, the demand of cloths basically based on level of winter. And there may be fluctuations. And economic principles like demand elasticity of demand and other principles. So we can consider multiple things in economics. First is scarce resources, incentives, market mechanism under these economic principles. Now the second point is finance. In finance, basically two terms. First term is called arrangement of fund and second term is called investment of fund. So first point is arrangement and second point is investment of funds. And in this one more is considered, this is the risk management. Okay, so arrangement of funds. This is the basically in this we have considered capital allocation. So we will see later. So arrangement of funds means if you need to start a business, so you can take money from your other businesses. You can take money from banks as loan. You can take as debt, you can take as equity, you can launch your shares. So by multiple methods you can take money for your business, right? Now investment of funds, we will focus investment of funds. So investment in core business for which you are taking money, or if you have additional fund, then you can use this fund to purchase a land as investment. Some amount you can invest in equities, and so on. So this is kind of investment decisions. Now come back to capital allocation. Now we need to decide how much we should invest in core business, how much percentage we should invest in purchasing of land and purchasing of equity shares. Now the risk. The bank interest, suppose 7% per annum. And if we start a business, if there is no profit, no loss, zero profit, zero loss. So there is a risk of only 7%. Now the next thing, analytics. In analytics, we will see multiple statistical tools and techniques to quantify behavior. The main thing is behavior, and to test the models and to optimize outcomes. First thing, quantity behavior. Quantity behavior, just like I am asking a policy of government during COVID-19. Then your answer is either yes or no. But when we apply statistical analysis, we will not consider these words yes and no. We will write this yes as 1 and this no as 2. It's vice versa. If we are collecting data about level of satisfaction, so level of satisfaction may start from 1 to 5. So 1 is least satisfied and 5 is most satisfied. So we can convert level of satisfaction, level of anything, or answers like yes or yes and no in form of quantity form. Now we can study the pattern of this yes, pattern of this no, pattern of this level of satisfaction in terms of quantity, and we can test the multiple models. Now optimize outcomes. Optimize, basically the meaning of optimize means neither maximum nor minimum. This is called optimum, minimum or maximum. So this word comes under this optimum, and optimum word basically used for optimization of resources, because in economics we have scarce resources. So to utilize these resources in an optimum way, we need to apply multiple optimal solution methods. So these 3 points are there which are very important for these kinds of business scenario. First is economic, second is finance, and third is analytics. Now we need to move next. These are the basic assumptions for underlying economic models. So there are basically four key assumptions. First is rationality, second is scarcity, and third is ceteris paribus and market behavior and incentives. So this rationality, first assumption is especially for business person, or we can say owner of the business. So main motive of the owner of business is maximum utility of resources, or we can say maximum profit. This is the main motive of a business identity, or we can say business owner. Just like in this case, for example, airlines assume passengers choose flights that offer the best combination of price, timings, and inconvenience. We are talking about combination. And we are talking about best combination. And we are considering 3 things in best combination. First thing is price. Second thing is timing. And third is convenience. Convenience is associated with all facilities, associated with traveling, and timing not so much, long journey, duration, and price is economic. So in rationality, the objective is to maximize profit or utility with providing all these things. Perfect price, balanced price we can say, perfect timing or limited duration of journey, and convenience. Now scarcity is already discussed in economic, but resources are limited, forcing trade-off between alternative uses. As we have very rare, very small uh, resources, very less resources. So how we can utilize these resources 100% without wasting? Just like for an example of biomass. We were converting this biomass into biofuel by taking its extract to biorefinery and mixing some other chemicals, then convert into biofuel. So in this stage, not only extract should be used, we can use the waste, dry waste also. We can use this dry waste in terms of biochar. We can say this is 100% utilization of resources or maximum utilization of resources. Now the next, ceteris paribus. Ceteris paribus means all else equal. All the things are equal. Now for this, analyze, assume other factors remains constant to isolate the effect of a variable. Just like regression analysis. In regression analysis, there is concept of y equals to a plus bx. This is the basic concept. Now we can consider this y as total cost, and this a is considered as fixed cost, and this bx is considered as variable cost. Now variable is depend on only one thing, only one, x. X is variable quantity and a is fixed, b is fixed. Suppose a is 5 and b is 6 and x is variable quantity. Suppose we are talking about a textile manufacturing industry, and this textile manufacturing industry is just making bed sheets, not other product. So this total cost is based on only this bed sheet production. Now suppose this company also producing more products, like we can consider first thing is bed sheet, second thing shooting shirtings, and third thing is blankets. This 3 is the x3 is blanket, this is shooting shirting, and C is the cost of raw material per unit for the shooting shirting, and D is the cost of raw material per unit for blankets. Now if we fix the quantity x2 and x3, only the change in this x, then in that situation we can consider all else equal. Analysis, assume other factors remains constant. So these two factors are constants and one is changing. Constant to isolate the effect of a variable, right? So one more example is there. Studying the impact of price on demand assumes advertising and competitor prices are unchanged. So when we predict the price, when we fix the price, we will consider only the demand. We will not consider other factors like advertisement expenditure or competitors price. These are same. There is no change. So this concept is considered as ceteris paribus or all else equal. Now the fourth point, market behavior and incentives. This market behavior is associated with psychology of the customer, we can say. So in this case, the supply, demand, pricing respond, predictability to economic incentives. So in this case, for example, an increase in fuel prices, I have already given this example. An increases in fuel prices typically leads to higher airline ticket prices. When fuel prices increases, then the airline prices also increases. This is the concept. So in basic assumptions of economic models, there are four things. First is rationality, second is scarcity, and third is ceteris paribus, and fourth is market behavior. And market behavior is totally depends on uh, incentives, or we can say customer behavior, customer psychology also, right? Now the next point is building and using model of behavior. So in this case, in this point, models are simplified representation of reality. So models are what? Representation of reality. Designed to explain and predict the outcomes. Objective of this is explain and predict outcomes. They are critical because business decisions involve multiple interchanging variables, interacting variables, not interchanging. So the types of model, basically three types of models. First model is deterministic. This is stochastic or probabilistic, and third is behavior models. So this third model is basically depends on human psychology. This deterministic model based on certain things, fixed things. And this stochastic model is based on uncertainty. And this is based on human psychology. Okay, so in first case, deterministic model. Deterministic model assume no uncertainty. This means that things are certain things. The main point is certainty, and produce precise predictions. For example, calculating total production cost given fixed input cost. We can consider one more example. Just like in paper distribution. Demand of newspaper is approximately fixed. There is no fluctuation in demand of newspapers. So in this case, we can find exact cost related to transport, related to production, related to raw material. So we can find fixed cost because the demand is fixed. Demand is certain demand, not uncertain. This is certain demand. So when the things are fixed, when the things are in determinable form, so we can apply this deterministic models. Now, second thing is stochastic and probability. So for each activity, there are three scenarios. First scenario is most likely. And first is optimistic. And third scenario is pessimistic. Now, what's the difference between these three scenarios? Most likely, optimistic, and pessimistic. Suppose the normal wake up time in India is approximately 7 to 8 p.m. 7 to 8 a.m. not p.m. So most of the people wake up between this 7 to 8 p.m. But some people at 4 o'clock, but some people at 10 o'clock. So the weightage of these 4 o'clock people is very less. This is approximately 5%, or we can, this is just 5%. And pessimistic, who wake up at 10 a.m., this is approximately 10%. So majority of the people lies between this category 7 to 8, or we can increase this by 5 to 8 a.m. So majority means 85% weightage of these people. So when we will prepare any strategy, so we will use this predictive rules, or we can say probability 5% for these people, 85% for majority, and 10% for these pessimistic kind of situation. So in this case, there is no fix. There may be change. This may be 5 to 6%, 6 to 4%. This 85% may become 87% or 79%, and change, minor change in this also, like 8% to 12%. So this concept is totally based on probability, because the things are not fixed, things are uncertain. Right? So this concept is called stochastic models. And now behavior model. We can consider one more example for this case. Forecasting monthly sales, accounting for market fluctuations and seasonality. Just like current weather, this is the month of April. In Uttarakhand or in some other states of India, sometimes the temperature is 40 degrees Celsius and sometimes the temperature is just 21 degrees Celsius. So there is very high fluctuation, there is very high uncertainty, right? And now the next behavioral models combine economic principles with human psychology, capturing non-linear or irrational behavior. Now in this point we are considering two things: economic principles with human psychology. Economic principles like demand, price elasticity, or we can say demand elasticity. So if price increases, then sometimes demand also increases. If price increases, sometimes demand decreases because of purchasing capacity. Just like in case of gold, as the gold price is increasing, demand of gold may decrease, right? So this depends on human behavior. Some people says gold is increasing, we can't purchase. So in that situation, the demand of gold is decreasing as the price is increasing. Now, the next point, one more, applications in business. Applications in business, Uber's example, uses behavioral model to predict demand peaks and adjust the dynamic pricing. Day before yesterday, I have seen one advertisement of Uber. First auto travel is free. First auto travel is free. This is what? This is to attract the customer behavior wise, human psychology. Because we are getting free service, we are getting free table one time, so we will use Uber. Now, the example of Amazon uses stochastic model to forecast inventory requirements. Stochastic model means uncertainty. There is uncertainty in demand. So they use these kinds of model to forecast inventory to store the product. Now the next, quantification and empirical testing of models. Now first we will discuss steps in quantification and testing and why we need this quantification and testing of data. So models are only valuable if they can be quantified and tested against real world data. If our model is satisfied with real world data, then we can implement this model anywhere. Now the quantification assigns numbers to variables while empirical testing validates model predictions. So for model predictions, we need to convert your data into quantitative variables, and then we can test these models. We can validate for prediction also. So now the steps in quantification and testing. So first step always data collection. Second is parameters estimation. Third is hypothesis testing, and then model refinement. Okay, so first is data collection. Data collection is gathering relevant metrics such as sales, price, customer behavior. So in data collection, basically there are two methods. First is primary data collection, and second is secondary data collection. So in primary data collection, data is collected directly from the respondent. And in second case, secondary data is collected from published reports. Published reported content, yeah, reports. And parameter estimations assigns coefficient to measure the relationship between variables. Just I have explained concept of regression analysis, just like y equals to a plus bx. So these are what? This is fixed cost. Suppose fixed cost for a manufacturing is 10 lakh, 1 lakh rupees or 10,000 rupees, and the variable cost per product is 100. So the value of B is 100 and multiplied by X. X is quantity, and you can find total cost. Now in this case, assign coefficient to measure the relationship between variables. Now there are two types of variables. One is dependent variable and second is independent variable. Now the impact of this first independent variable to the dependent variable because of multiplication of this 100. So we need to fix these coefficients also, and these coefficients are based on available data. So that's why data collection is important, to fix the coefficient of variables. Now the next point is hypothesis testing. So in hypothesis testing, there are two types of assumptions. First is called null hypothesis, and second is called alternative hypothesis. So null hypothesis and alternative hypothesis. Suppose we have demand of ice cream. We have data of demand of ice cream for 7 days, from Monday to Saturday, Monday to Sunday. The demand of ice cream on Monday is 100 pieces. Demand on Tuesday is 90 pieces. On Wednesday, this is 130. And on Tuesday, this is 40 units. And this is 80 units. Suppose this is 70 units. And this is 100 units again. So the question is, demand varies day by day. Sometimes 100, sometimes 40, sometimes 80. So can we consider all these demand as equal demand? Equal demand means if we had all these quantity and suppose the total is 400 or 3500, 350 suppose. So can we divide equal quantity into 7 days? This means 70 units every day. So can we consider equal distribution of 70 ice creams every day or not? So generally we will consider the demand is equally distributed. And in alternative hypothesis, there is no equal distribution in demand. So we need to prove this point. We will work on alternative hypothesis or on this null hypothesis. So if we can prove one hypothesis, suppose we can prove this null hypothesis, this distribution is not equal. So we can say this is already not equal, right? So this kind of situation comes under hypothesis testing. Hypothesis testing basically we will consider a parallel opposite direction scenario to prove this current scenario, right? Now the next model refinement. After getting result from hypothesis testing, suppose the model is rejected. Suppose H0, your assumption is rejected. So you need to refine your model to accept your null hypothesis, or as per your requirement. Sometimes you need to reject your null hypothesis. So this is the model refinement. So in quantification and empirical testing of data, four things. First, we will collect data collection. Second, we will find parameter estimation, parameter estimates. And third is hypothesis testing. And fourth part is model refinement. In this hypothesis testing, there are two parts: null hypothesis and alternative hypothesis. Now move to next. So fifth point is statistical tools and econometric approaches. So in this, we will focus on four things. First is regression analysis, then time series analysis, and then two more, optimization models and risk and sensitivity analysis. So first, we will focus on this regression analysis, which examines the relationship between dependent and independent variables. I have already taught the concept of y equals to a plus bx. So this is your dependent variable and this is your independent variable. If the quantity x increases, then y also increases because all are plus quantity. If this symbol is negative, this is not a plus bx, this is a minus bx. So as the quantity of x increases, then the value of y decreases. So this is a regression model. We will discuss with method. For example, how price changes affect the demand for a product. So demand, price, when price changes, then how the demand changes. Demand increases or decreases. Okay, parallelly with this, we will see the concept of time series analysis for forecasting sales or demand. So we have one numerical example. This is basically designed for time series analysis. But before studying this time series analysis, we will see concept of regression analysis. Okay, so for regression analysis, we have this example. For the given data of advertisement expenses and sales, find the regression relation on advertisement expenditure y on x and advertisement expenditure on sales. So we will see in this concept there are two variables. First is advertisement expenditure and second is sales. And we can consider this first variable as x and second variable as y. So sometimes you need to find the value of y on the basis of specific advertisement expenditure, suppose 30, or sometimes you need to find required advertisement expenditure if the sales target is of 80. We can consider this in terms of crores and we can consider this in terms of lakhs, right? So when you need to find X, advertisement expenditure, so you can write this is the requirement of X on the basis of Y. And for this first case, if you need to find Y on the basis of this 30, so you can say this is the requirement of Y on the basis of X. So there are two concepts in regression analysis. First is Y on X and second is X on Y. So if you need to find regression analysis Y on X, then we will write regression equation as Y equals to A plus BX. And if we need to write this equation in terms of X on Y, then we will write X is equal to either A plus BY also we can write, or simply we can write C plus DY, where A and C are fixed and B and D are coefficient for these variables, right? So this is the format for regression analysis for such kind of cases. So we need to find these two equations, first Y on X and second is X on Y for advertisement expenditure and sales. So suppose on solving these two equations will be solved by using these two normal equations, and then you find the value of A and B, then you will get the form of equation like Y equals to 2 plus 3x and x equals to suppose 4 minus 2y. These are the two equations on solving using least square method. This is the method. I am not explaining here this method, but final output you will see this kind. So suppose from this result we are getting these two equations, Y on X and X on Y. So you can find the value of Y by putting X equals to 30. So by putting X equals to 30, you can find the value of Y by simply Y equals to 2 plus 3 into 30. So you can find Y. Y means sales equals to 92 for respective value of X 30. Now in that way you can find X also, right? So this is the small concept of regression analysis. Now we are talking about regression analysis for time series. There is concept of time series. Predict the future trends using historical data. So future trends and historical data, these are two basically important terms. So we have this data set, and this is historical data from 2001 to 2007, and time series because of historical data, or we can say chronological data. So first variable is X, second variable is Y. Now we need to predict sales for the year 2010. Now to solve this kind of problem, we will apply least square method. So in least square method, there are two concepts. First is Y on X and second is X on Y. But in this case, we are talking about time, and second thing is sales. As time is not a dependent variable, this is not a dependent, this is independent variable, and sales is dependent variable. So in this case, we have two columns. First is time, X, and second is Y, sales. So as regression analysis, there are two concepts, Y on X and X on Y. But in this case, for X, we have T. So time is not dependent on sales. Sales is dependent on time. So we can't apply this second concept X on Y, or we can say T on Y. So this only first concept is applicable, Y on T. So in this concept, we can remove this first part because this is not applicable in case of time series. So in time series only first concept is applicable. Now we can write this model in terms of t. So first equation can be written as y on t, and y on t main equation can be written as y equals to a plus bt. And normal equation for this y equals to a plus bt, we had these two normal equations. I am copying, we can copy these equations. So we can write na plus bx. First equation is summation y na plus bx. So b is x is replaced by t. Now we can write this summation, this equation as b summation t. This is the equation number a. Now the second equation is summation xy equals to ax plus bx square. So this equation can be written as summation yt equals to, this is a summation x. So this is a summation t plus b summation t square. Now to solve these two equations, we need all these values, but the original data in terms of x and x values are very large, and if you find x square, so this x square quantity is so large, so we will convert this x quantity into t. First we will convert this x quantity into t. So when we convert this x quantity to t, so we will follow a particular methodology. So particular methodology is what? We will use this methodology to convert x into t, year into t. So if your data in odd numbers or number of years, then you will use this year minus middle year concept. And if your data is even, then you will use this concept of 2 into year minus middle year. I will explain both. So first we need to calculate t equals to year minus middle year. So for this data we have already calculated. Now we will consider this the value of t by using year minus middle year because we need to remove this t from the calculation, or we want to put this summation t equals to 0 to solve these equation easily. So if we put summation t equals to 0 in these two equations, in this first equation, if we put summation t equals to 0, then you will see this first equation, this equation a. This equation a can be written as summation y equals to na plus b into summation t. If summation t equals to 0, then you can write b into 0. Now this equation is summation y equals to na, because this whole quantity becomes 0. Now you can find the value of a as summation y divided by n. So this is the value of a. In that way you can find the value of b also if you put summation t equals to 0 in this second equation. So in equation b, if you put summation t equals to 0, then the equation becomes summation yt. We will not put t equals to 0 for this, because this is only for summation t. This is summation yt. So a into summation t equals to 0 plus b summation t square. Now you can write this as, this quantity as 0 and this quantity as summation yt equals to b summation t square. Now you can write this as b equals to summation yt divided by summation t square. So for the calculation of a and b, the objective is to find basically a and b values. So a and b, you need summation yt, you need summation y and summation t square, but we must have summation t equals to 0. So to get this quantity summation t equals to 0, we have specified methodology to find t. This is year minus middle year for odd number of years and 2 into year minus middle years for even number of years. So in this case, we have 7 years data. 7 years data means we have odd number of years. So first we will identify the middle year in this whole data. So in this middle year, in this whole data, the middle year is 2004. This is the middle year. Now to calculate T, we will follow year minus middle year. So simply T equals to year minus middle year is 2004. So respective year is 2001. Year is 2001 minus middle year is 2004. So 2001 minus 2004, this equals to minus 3. So this first quantity is minus 3. In that way, for 2002 minus 2004, you will get minus 2. And then when you find summation of this column, you will get summation T equals to 0. So you have this quantity summation T equals to 0. Now for solution of this, you need summation Y. So summation Y is this sales column. We have already calculated this summation Y. This is 238. And now we can put this 238 in this formula. So 238 divided by number of years, 7 years. So you can find this quantity. So this quantity is this quantity is 238 divided by 7. So this quantity is 34. Now for B, you need summation yt and summation t square. So we will prepare one column for t square. Square of this column, minus 3 square is 9. And then you need y into t. So product of this y column, sales, and product of this t column, time, this column. So 18 into minus 3, this equals to minus 54. In that way we can find all these values and then we will find summation ty. So now we will put these things in this value of B. So value of B summation yt equals to 154 and this quantity is divided by summation t. This is 28. So this equals to 5.5. Now we will put the value of B and the value of A in equation 1. So on putting these values in equation 1, you will get the equation y equals to A is 34 plus B equals to 5.5 into T. So this is the required equation. And on the basis of this equation, we can find predicted value. So predicted value can be denoted by y cap. So now we can write this as y cap. This is the overall result. So for predicted value, we will add one more column. This is y cap, where y cap equals to 34 plus 5.5 t. This is 34 plus 5.5 into t. So for first year 2001, the value of t is minus 3. So when we put t equals to minus 3 in this equation, then we will get 17.5. We will get 17.5, right? So the predicted value of this is 17.5. In that way we can find other values also. Now we can put 2. So we will get this value as 23. If we put this value as 1, then we will get 28.5 when we put this minus 1. And when we put t equals to 0, then we will get this value as 34. So we will get all these values in that way. So these values are considered as predicted value. This is predictive value. And now we will forecast the value, particular value. Now the main question is least square line. So this is the equation of least square line, equation of straight line, and predict sales for 2010. So predict sales for 2010. Now for the year 2010, for 2010, the value of t is what? We have used t equals to year minus middle year, and for this data year is 2004 and the middle year is 2010, not 2004, and the middle year is 2004. When you subtract this, you will get t equals to 6. So when you put t equals to 6 in this equation, so you will get y equals to 34 plus 5.5 into t, and t equals to 6, and then on solving you will get 67. So 67 is the sales in 2010. So this is the forecasting for 2010, and these are all predictive value, and this is the overall concept of regression analysis for time series. Now we can discuss the concept of event data also. So in case of event data, you will have one more year, 2008. Now in case of 8 years, now n equals to 8 in your data. You need to find t, and in case of event data we will use 2 into year minus middle year. Why 2 into year minus middle year? This is just for ease of solution. So when we use not 2 into year minus middle year for this event data, if we use year minus middle year, so in that case middle year is what? In that case middle year is 2004.5, because this is in mid July 2004 mid. So this 2004.5 is considered as middle year. Now if you find first value of t with respect to 2001, then you will use year 2001 minus middle year 2004.5. So you will get this value as minus 3.5. Now when you find squares, when you multiply these decimal quantity, then this will become little bit complex. So to remove this complexity, we will multiply this quantity by 2 into 2. So this 2 into this 3.5. So you will get minus 7. Now you will see this first quantity as minus 7, this second quantity minus 5, minus 3, and this is minus 1, then 1, then. So in that way you will see the summation of this column is equals to 0. Now the rest methodology is same for this time series concept. So these 2 points, regression analysis and time series, this examine the relationship between dependent and independent variables. So in case of time series, time is independent, and in case and second thing, sales is dependent on time. So that's why in time series we are considering y on t, y equals to a plus bt. And using this regression analysis in time series, you can forecast the sales, you can forecast seasonal demand also, you can forecast multiple things. You can forecast sales, you can forecast sales on the basis of advertisement, you can predict demand on the basis of price change. So you can do multiple things using this concept of regression and time series analysis. Now the next, Allocate resources efficiently under constraint. The schedule, for example, scheduling production to minimize cost while meeting the demand. And risk and sensitivity analysis. So we are discussing both these topics in a single part, optimization model. Then we will discuss sensitivity, how we can analyze sensitivity. Okay, so first part, optimization model. So optimization model basically based on linear programming model. This is the base of optimization model. So in this first question, you will see a small scale industry manufactures two products P and Q, which are proposed in a machine shop and assembly shop. Product P requires 2 hours of work in a machine shop, 4 hours of a work in assembly shop to manufacture, while product Q requires 3 hours of work in machine shop and 2 hours of work in assembly shop. So in one day, the industry cannot use more than 16 hours of machine shop and 22 hours of assembly shop. It earns a profit of 3 per unit on product P and 4 per unit of product Q. Give a mathematical formulation of the problem so as to maximize profit. Okay, so in optimization model, basically 4 parts. First part is mathematical problem, managerial problem, not mathematical problem. So first thing is managerial problem or business problem, we can say. And we will convert this managerial problem into model form. As we have discussed models, building models. So first we will build the model and then we will apply solution methodology, solution methods, and then find solutions. And after finding solution, we will apply sensitivity analysis. And sensitivity analysis is to analyze the impact of each variable. So first thing, managerial problem. This is managerial problem. We will convert this managerial problem into model. So this model, generally for this question, we will use LPP model, linear programming model. So in this linear programming model, there are 3 parts. First part is objective function. Second part is subject to constraint. And why we are adding this part subject to constraint? Because we have scarce resources and non-negativity constraint. 3 parts. So we will see this question in parts. So companies producing 2 types of products. First product is P. Second product is Q, which are proposed in a machine shop and assembly shop. 2 types of shops. First part is in machine shop and second is assembly shop. So product P requires 2 hours of work in a machine shop. This is machine shop and we are talking about product P and it taking 2 hours. And 4 hours of work in assembly shop. Now this same product P in assembly shop for 4 hours. And now we are talking about second product Q. Q requires 3 hours of work in machine shop. Product Q, 3 hours in machine shop and 2 hours work in assembly shop. 2 hours in assembly shop. And now in one day, the industry cannot use more than 16 hours of machinery shop. 16. So this is 16 hours available. So this is the scarcity of resources. Scarce. And then 22 hours of assembly shop. 22 hours for this. This is again scarce resources. if earns a profit of 3 rupees per unit of product P. So this is the first product and profit for this product is 3 rupees per unit and 4 rupees per unit on second product Q. So give mathematical formulation. So first we will convert this into model. So mathematical formulation means we need to convert this into model. And in this model there are three parts. First is objective function. Second is subject to constraint, and third is non-negative constraint. So we will consider basically the objective of solution of this problem is how much quantity should we produce for P and Q to maximize the profit. If we think about as in business personality, so objective is maximization of profit. Maximization of profit. If this is not a profit, in certain cases this may be cost. So the objective of business person or business owner is to minimization of cost. So sometimes it is minimization, sometimes it is maximization. In general way we will say optimization. So if this is the case of the things which should be minimum, so this is minimization case. If this is the case with respect to the things which should be maximization, this is maximization case. So this case is associated with profit, so we can say this is a maximization case. So now we will write this case in form of mathematical model, or simply we can say formulation. So suppose we are producing X quantities of Q and Y quantity of X quantity of P and Y quantity of Q, and the main objective of this problem is to find value of X and Y. So profit per unit, main objective of this program is maximization of profit. This is the objective function, maximize profit, and profit is denoted by Z in this case. So we are writing maximum Z, max Z. Now per unit profit on P is 3 rupees and we are producing X quantity. And per unit profit on Q is 4 rupees and we are producing Y quantities. So the total profit is 3 into quantity, profit per unit into quantity X, profit per unit into quantity Y. So this total is 3X plus 4Y. So the objective function is maximum Z equals to 3x plus 4y. If this is the case of cost, so we will write minimum Z equals to 3x plus 4y. Now the rest things, second part of this is objective function. Subject to constraint, not objective function. So subject to constraint is always attached with scarce resources. Just like in case of clothing industry we have considered in starting. So in this case, the cost is increased by 8%. And if we increase the price, then customer may flee. So this is the constraint. This is the scarcity of resources, right? So scarcity of resources means maximum availability of this machine shop is 16 hours. This means we can use this machine maximum 16 hours or less than 16 hours. So we will write less than or equals to 16 hours. But we are producing two types of product. First is product P and second is product Q. So first we are talking about for machine shop, for this first thing. So for this machine shop, product P, for product P we are considering quantity Q. So quantity X. So quantity X we are producing, and each quantity took 2 hours on machine shop. So to produce X quantity of P on machine shop, it will take 2 into X time, 2X. So this quantity is 2X. Now For machine shop, if we produce this product Q and quantity Y, and the product Q took 3 hours per unit and we are producing by units, so 3 into Y is 3 by. But total utilization of this machine shop should not exceed 16 because this is the maximum availability. So there may be a possibility we are not producing this Q product, we are producing only P product. So 2 into 8 equals to 16, we can utilize 100%. But if we are considering this 8 quantity, so this 8 quantity must satisfy this second constraint also. So in the second constraint, if we put x equals to 8, 4 into 8, 4 into 8 is 32, but maximum availability of this assembly shop is 22 hours. So this quantity 8 for x is not satisfied this second constraint. So that's why we need to create constraint first. So 2x plus 3y and total availability maximum 16 or less than 16. This is the first constraint for machine shop. In same way, we will write constraint for assembly shop also. So for assembly shop, for product P, 4 hours per unit. So we are producing X units. So that's why this is 4 into X. So we are writing 4X. And second product Q product on assembly shop for 2 hours. So this is 2 into Y. This is 2 into Y, but we are restricted to 22 hours. So we can utilize this assembly shop maximum for 22 hours, right? So we will write this as less than or equals to 22 hours. So this is the subject to constraint as availability of resources. So in this case, we have only two resources. First is machine shop and second is assembly shop, and these are limited to 16 and 22. And the third part is non-negative constraint. We have written x is greater than equals to 0 and y is greater than equals to 0. Why this x is greater than 0 and y is greater than 0? Because if we produce any quantity x and y, so either we will produce this quantity or we will not produce the quantity. If we will produce the quantity, then the value of x and y is greater than 0. And if we will not produce this quantity, so this is considered as 0 but not negative. That's why we are writing this as non-negative constraint. So this is the model. This is the model for our managerial problem. Now, to solve this model, we will use methods. Now we are in this stage. Now we will solve this method, solution method, and there are multiple methods for multiple types of models, and this is LPP. So for LPP we are using graphical method. This is graphical method for optimization. Okay, so we are using graphical method. Okay, so to solve this problem using graphical method, we will find coordinates for these constraints only, for this first one and second one. This is the first, this is the second. So to find solution using graphical method, or to represent this problem on graph, we will find coordinates. So to find coordinates, this is the equation. We will consider x and y. So first we will consider the value of x as 0. Then we can find value of y. So in this equation, if we put x equals to 0, then the remaining equation is 3y equals to 16. So the value of y is 16 upon 3. This is 5.33. And now we will put y equals to 0 in this equation. So if we will put y equals to, sorry, we will not put this value this side because this is the value of y. So we will put this value of y here, 5.33. Now we will put value of y as 0. So when we will put value of y as 0, then the value of x is what? So this quantity becomes 0. Now the remaining equation is 2x equals to 16. So 2x equals to 16 means x is equal to 8. So now we have two pairs. First pair is this, second pair is this. So first pair is 0, 5.8, 5.33 and second pair is 8, 0. This first is x and this second quantity is y. Now we will do the same task for second equation. For the second equation, this is x and this is y. So for this x, we will consider 0 and for y, we will consider 0. So if we put x equals to 0 in this, so the remaining equation is 2y equals to 22 and y equals to 11. And if we put in this equation x equals to 0, y equals to 0, then we have equation 4x equals to 22. So 4x equals to 22 means x equals to 5.5. So this is the first pair and this is the second pair. So first pair is 0, 11. If we put x equals to 0, then we are getting y equals to 11. And second pair, if we put y equals to 0, then we are getting x equals to 5.5. Now we will draw this on graph. So first we are drawing this equation and we are showing this equation by red color and we are showing this equation by green color on the graph. Okay, so first point is 0, 5.33. So 0 on x-axis and 5.3 on y-axis. So this is the x-axis. On this x-axis, the point is 0. And on y-axis, point is 5.33. So this is the y-axis. On this y-axis, this is the y-axis. This is the x-axis. So on x-axis, point is 5.33. So approximately this location. And second point is this 8, 0. So 8 is on x-axis and 0 on y-axis. So on x-axis, location of x is this x equals to 0 and y equals to nothing. So y equals to 0 at same point. Now we have 2 points. One is this at 5.33 and second point is this 8, 0. Now we will match these points. So we will match simply we can match without the scale also. So we can match this point 8, 0. This is the line first. And second line is this 0, 11 and 5.5, 0. So 0 on x-axis, 11 on y-axis, and this 5.5 on x-axis and 0 on y-axis. So first point 0, 11. So this is the location of 0 and this is the 11. And second is 5.5 on x-axis and 0, nothing. And we will match these points. So we will match these points. So this is the line second. Now we will shade the region. So to shade the region, Okay, so first equation, first constraint is this less than 16. So this is less than 16. Less than 16 means we may use either 16, or less than 16 means 15, 14, 13 up to 0, right? So for this line, first, the area towards 0, for this line area towards 0 is this downside area, but not in negative region. And for this second equation, this is also less than 22. So less than 22 means either 22, or less than 22, 21, 20, or up to 0. So for this line, the direction for 0 is this downside towards 0. This is the downside region of that. Now you will see a common region, and this common region is this, where both the constraints are satisfied, and the common point of this common region is this, and this. So basically 3 points are there. First is this A, second is this B, and third is C. So now we will consider only these 3 points to find solution, and this is the feasible region FR. So in this feasible region we have 3 points. So first point is A, second point is B, and third point is C. And this is the origin. We can write this origin also, but if we put the value of at origin, always we will get 0. So for point A, this is the point A, and the coordinate of this point A is 0, 5.5. And for this second point B, this is approximately 4, and this is 3. So this is 4, 3. This is the second point, and the C point is this 5.5, 0. So this is not 5.5, this is 5.33. So we are considering this as 5.33, and this point C is 5.5. Let's check this point. Yes, this is 5.5, 0. So this 0.5, 0. Okay, at origin this is 0, 0. Now we need to find the value of objective function. So objective function, this profit function, is this maximum z equals to 3x plus 4y. So this is 3x plus 4y. This is the objective function. So now we will put these values in this objective function. So 3 into x equals to 0 plus 4 into y equals to 5.5. So this equals to 22, and this is 4 and 3. So this is 3 into 4 plus 4 into 3. So this is 24. And this value is 5.5. So 3 into 5.5 plus 4 into 0. So this value is 5.5 into 3 is 16.5. And at this, both are 0, 0. So you will get 0. Now your objective function is associated with maximization. So in all these values, the maximum value is 24. This is the maximum value. So we can find this maximum profit, and the corresponding value of x and y are 3, 3. So for this case, the value of maximum profit, maximum z, equals to 24. If we produce P product X quantity, and X quantities are, I think, 4. Yes, so these are 4 and 3. So these are 4 and 3. So we will take 4, and Y quantity is 3. So this is the solution of this problem. But now we need to conduct sensitivity analysis also. So this is the problem, a solution of the problem. So we should produce 4 units of P and 3 units of Q, P and Q, and total profit we will get 24. So this is the optimization concept. Now we will attach this optimization concept with this sensitivity analysis also. Okay, so to attach this concept with sensitivity analysis, we will focus on constraint. Basically, this is based on constraint. In constraint, we have two things. First is 2x is 3y is less than equals to 16, and second constraint is 4x plus 2y equals to or less than 22. So this is for machine shop and this is for assembly shop. Now suppose now due to technical fault in machine shop, as machinery is not working properly, the working time for this product is increased. This may be 2.5, or this may be 3 hours, or there may be a reduction in time if the machinery is perfect or working well, or any technical changes, machine is working good, we consuming less time. So we will change the value of coefficients. So coefficient is 2. Now we will test the output with 10% change, with 20% change. This may be positive or this may be negative. So if we consider two values, so if 10% decreases, then the time is 1.8 hours. If 10% increases, then the time is 2.2 hours. If 20% decreases, then 1.6 hours, and if 20% increases, then the time is 2.4 hours. So for this particular value 2, coefficient 2, if we do some minor change in this quantity 2 with 10%, 20% or 30% or with any other gap, so the change in this also, because time of this product also increases or decreases, so we will also increase this 3 by 10% up and 20% up or down. So this is 3. If 10% reduces, so this is 2.7. If 20% reduces the time, then this is 2.4. If 10% increases, then this is 3.3. If 20% increases, then this is 3.6. So these are the different changes in machine shop timings. So if we change 10% in both, this means if we are writing this as 2.2 and if we are writing this as 3.3, now the impact in total profit, suppose the total profit is increased and this is now 28%, 28 rupees. Suppose when we put 20% change in these two quantities, then the total profit is 29%. If we change 30% price, then this is 30, and the stage when the price is constant to 30, 30, 30, 30. So sometimes you will see continuous change in total value. Sometimes you will see after some percentage, you will see the constancy in total profit. So this kind of study is known as sensitivity analysis. Sensitivity analysis means basically the change in variable values, change in coefficient values, impact in total. This is called sensitivity analysis, and this is the final step of this model validation. And the objective of this sensitivity analysis is model validation. So in this example, we have studied these three things. First is managerial problem, not probability. Second is model formulation, then solution method, and then solution with sensitivity analysis. We have studied all these four things. Now some special cases we need to study in this programming or this model development. In this model development, we have only two constraints. Sometimes there may be more constraint. More constraint, just like in this case, you have only two constraints. This is the first one, this is the second one. And we are adding one more constraint, third constraint, as x is less than 3 or less than equals to 3. Now there is a constraint x is less than equals to 3. Now when we will consider this constraint as x is less than equals to 3, x is what? X is p-type product, production of p-type product, and we are restricted to produce less than 3 quantities. This means demand of this product P is less than 3. So no need to make more than 3 products in this case. Okay, so for this situation, what we will do in this graphical problem, in this graphical method. Okay, so we need to add one more constraint, x is less than equals to 3. So for this x is less than equals to 3, we will not touch this line with y-axis, because if we write this as x equals to 3, so there is no y, there is no role of y is missing. So this means on x-axis, I am drawing this with another color. So if x equals to 3, so x equals to 3 is this location, and there is no y in this equation, so only x is there. So we will draw a vertical line which passes from 3, and this is x is less than equals to 3. This means we can produce maximum 3. We can produce 2 units, we can produce 1 unit, we can produce 0 unit. So we will shade the portion towards 0. This means in left hand side of this equation. So now your feasible region is different. Now your feasible region is this point, and this point. So now you will find solution on the basis of these points only, because now your feasible region is changed. Your feasible region is only this region, which is under all the constraint. This is your feasible region. So in this feasible region, these are the corner points. One is this, second is this, and third is this. So on the basis of this, you can find your solution. Sometimes you will see the problem of minimization. Suppose this is not the case of profit. Suppose this is the case of cost. So you will find minimum cost, or we can write this as minimum Z, minimum cost. So in that situation, we will consider the minimum value. So in this case, the minimum value is this if this is the case of cost. So this is considered as minimum value, and respective value of x and y are 5.5 and 0. Now there is one more situation. If you consider the minimum value, or sometimes in case of maximization also, the value of x is 5.5 and the value of y is 0. This shows you are not preparing product y, you are producing only the product x, and this quantity not in integer term, this quantity in form of decimal term. So if you are producing a complete product, suppose you are producing transformers, so you will not produce a 0.5 transformer, right? So in that situation, how you will find your solution? So we have two options: either you will use 5 or you will take 6, either 5 or 6. So if we put 5, so we will test the model at 5. Okay, so x equals to 5 or y equals to 5, and y is fixed as 0. So first we will test this first equation and second equation. So first equation is 2x plus 3y is less than equals to 16. So we are not producing y equals to 0. So this is 3 into 0. And first equation is 2x. So 2 into, we have two options, 5 or 6. So if we put 5, then the result is 10. Satisfied with this constraint. And now for second constraint, for second constraint, this is 4 into 5 plus 2 into 0. This equals to what? 20. So this is also less than this, 22. Now we will check for 6 also. So we will test another value 6 also. So if we put 6 here, in this equation, if we put 6, this is 6. So you will see 2 into 6 is 12. So this is new value is 12, which is also less than 16, satisfied. And if we put in this equation, so 4 into 6, 4 6 are 24. Now this value is 24, but this is restricted to 22. So in this case, the solution is not 6 unit, the solution is 5.5. So this is called integer program. So in this case, the answer is 5. And now as per this 5, you need to find total profit also. So you will replace this quantity 3 into 5 as x equals to 5 plus 4 into 0. Then you can find total profit 3 into 5. This is 50. So this is the overall concept of optimization. So in this point, we have discussed multiple things. Just to recall. So optimization model: allocate resources efficiently under the constraint. So constraint part is clear. We have taken two constraints. First is assembly shop, first is machine shop, and second is assembly shop. And allocate resources. Allocate resources, how much we can utilize this as machine shop, how much we can utilize this assembly shop. And one more point with respect to this: allocation of resources. Okay, so for the main question, this is the main question. and the result is this 24 and 4 and 3 allocation of resources. So value of x is 4 and value of y is 3. Okay, so we can find total utilization of resources. So first resources is machine shop and your answer is 4 comma 3. So x is equal to 4 and y comma 3. So we will put in this first equation first. So when we put in this first equation, 2 into x equals to 4 plus 3 into y equals to what? 3, and the total is 4 2 ja 8, 3 3 ja 9, and this is 4 2 ja 8 and 3 3 ja 9. This is actually we are considering approximate answer. Actual value of this question is approximately 2.5. So if we consider this as 2.5, if we consider this final result as 2.5, then you will see this 2.5 into 3 and 4 to the 12. So 2.5 into 3, I mean, you must satisfy this constraint, and then you can say the total. We can learn this concept with this second equation also, because we have taken this approximate value from the diagram. In this diagram we have taken this approximate value, right? So this may be little bit less, this may be little bit more, this is little bit less. Okay, so I can explain this thing with second equation also. So if we are considering 4 for x, so this is 4 into 4 16 plus 3 this second quantity, so 3 into 2, so 2 into 3, 3 into 2 is 6, and this is 8 plus 6, this is 16 plus 6 is equal to 22. So this means you can utilize 100% of this machine assembly shop. In that way you can find for this machine shop also. We are not calculating this because we have not exact value from this diagram. If the exact value from this diagram is 2, suppose this value is 2, so you will put 2 here. So 3 2 ja 6 and 4 2 ja 8, and total is suppose 14. Total is suppose 14. So availability is 16 and you are utilizing only 14 hours. So there is lack of 2 hours. This means we have wasted 2 hours of machine shop, right? So this is the overall concept of this optimization. Now we have already discussed this sensitivity analysis, measure the impact of uncertainty on outcomes. So we have replaced this value 2 by 2.2, 3 by 3.3, or if we increase by 20% these quantities, so we can take this as 2.4 and this is 3.6 in constraint part. In constraint part means this one. In this constraint part, we are replacing these value 2 to 2.2, 10% increase. Then we are observing total impact in maximum value of Z. Maximum value of Z. So this change is called sensitivity due to change in parametric values. Now the next, applications in business. So okay, so airlines optimize ticket pricing using regression and demand forecasting, which we have discussed earlier in regression model. So we can set the price as per finding demand prediction. Why demand prediction? We can set the price of airlines. Retailers like Walmart optimize inventory using predictive analytics. So using predictive analytics, using forecasting of demand, we can identify how much inventory should maintain to fulfill the demand of the customer. And banks use econometric models for credit risk scoring, credit score to find credit score. There are multiple methodologies to find credit rating, and these tools allow business to quantify relationship, test assumptions, and make decision under uncertainty. So by using all these concepts, using regression analysis, using optimization methods, and using multiple tests like t-test in stats, chi-square test, and multiple types of tests, you can make decision under uncertain environment when the things are not fixed, or we can say probabilistic environment. Now the next part, last part, this is predictive analytics. So before learning visualization, students should understand predictive models, which extend to foundation led by economic and statistical models. Economic and statistical models. So I have explained concept of regression. Concept of regression is an statistical method, and generally we have used this model in economics. Economics means in prediction of demand and price, or to find relationship between demand and price. If price increases, then demand decreases or increases. Now the definition. Predictive analysis used historical data to forecast future outcomes, just like we have considered in regression analysis time series. We had data from 2001 to 2007, and we have predicted value for 2010. This is the forecast future outcomes. Forecasting techniques, trend analysis, moving average, exponential smoothing. So basically the trend analysis to find trend, just like we have considered data from 2001 to 2007. So if we are getting graph like this, increasing pattern, so you can find the trend value in future. The quantity will increase or decrease. You can find easily by using these forecasting techniques. Just like we have considered this regression example. In this regression example, first we have worked for this equation. This is y cap, and by using this equation 334 plus 5.5t, by putting t equals to -3, by putting t equals to -2, so you are getting these values, and these values are in increasing pattern. So simply we can say in 2010 the value will definitely increase. So this is the trend analysis, or we can say finding trend, or future forecasting techniques also we can say. And regression analysis, simple and multiple regression to model variable relationship. So in starting, I have considered one example of regression analysis, y equals to a plus bx. Initially, we were producing only for one product, only wet sheets. Second, we have added more things. Second is shirtings. And one more thing is added. This is blanket. So if we are producing three types of product, if we are using only one dependent variable, one independent variable if we are considering, then this model is considered as simple model. And if we are considering multiple variables, multiple independent variables, then this model is considered as multiple regression model, because multiple independent variables are there. So this is multiple regression model. Classification, binary and multi-class classification models, evaluation matrix. So just like if we are saying yes or no, so we can represent yes by 1 or no by 0. So either yes or no, this is binary, only 1 or 0 options. And multi-class classification models, in which we will consider psychological behavior. So psychological behavior, just like level of satisfaction 1, 2, 3, 4, 5. So this is least satisfied, this is the most satisfied, and this is in multiple categories. Two level, 20%, 30%, 40%. So this is considered a multi-class classification, and binary when you have either two options, either yes or no, other no option other than this. And the evaluation matrix means multiple kind of correlation between the variables. This may be based on correlation, this may be based on multiple statistical techniques, not only correlation and regression. Now, applications across industries. So in retail industries, to forecast sales, I have already explained this in regression analysis part. And financial sector, credit scoring, to generate credit score. Credit score is based on multiple things, just like credit score based on your credit card rating, credit card, your loan repayment, and your check clearance. So multiple factors are there. So this is also based on this regression analysis also. And healthcare, predicting patient outcomes, just like in case of COVID-19, impact of COVID medicine, COVID vaccine, positive or negative, or outcome is favorable for patient or outcome is favorable not for patient. So these kinds of things. And in airlines, forecasting demand and optimizing pricing. In airlines industry, as the demand increases, then the price of flights also increases. Just like in season, in season, winter season, in summer season, in cool area, the price increment in airlines. So this is one of the example for forecasting demand and optimizing pricing. Optimizing pricing means fixing the pricing, neither maximum or nor minimum. And key insights. So in key insights, predictive analytics builds on the quantitative and behavioral foundation introduced in this chapter. So now the last point, data-driven pricing strategies. So data-driven pricing strategies, first we are considering elasticity analysis. So in elasticity analysis, we are considering the earlier case of cloth industry where 8% increased in cost currently, and if we increase 10% price, then 20% sales drop. We are considering this scenario for this elasticity analysis. So from last year's data, as per this scenario, 10% price increases, 25% sales drop. Now the elasticity is percentage change in quantity. So elasticity equals to percentage change in quantity divided by percentage change in price. So percentage change in quantity, percentage change in price. So 10% price is increased, so that's why this is 10%. And percentage change in quantity means sales drop by 25%, so we will put 25%, and this is sales drop, that's why we are putting minus. So the impact is minus 2.5. So this is highly elastic because this is not equals to 1. If this is equals to 1, then there is no elasticity, and this quantity is not 1, this quantity is 2.5. This is highly elastic. So customer So we can say customers are price sensitive. So we can understand this concept of sensitivity in this also. So this means there is matter of psychology also. If the price increases, then the demand decreases. Now the second model is dynamic pricing. So in this dynamic pricing, airlines varying prices based on route, timings, and seat availability. Now in Urban Thread could do the same. Now what are the options for Urban Thread, which case we have discussed in the starting of this session. So launch jacket at 5% discount to the build demand. 5% discount to build the demand. 5% discount means if you are fixing price after increasing 8% cost, 8% cost is increased, then you need to increase the price. Now suppose the earlier price was 100 rupees. Now after increment in 8% cost, now you fix the price as 120 rupees. Now you can give discount on that price. So in discount of 5% if you give, so 6 rupees discount, now the product price is 4%. Now there is two concepts. One is economic concept and second is psychological concept. So if you give 5% discount, then customer think about this 5% discount. As the 5% discount, we are getting 5% discount, so we should purchase this thing. And as per economics, 8% costing is increased, then price also increase. This is also fulfilled. Now the raise price slowly as winter approaches. This is the first option, increase the price and give 5% discount. And second option is raise the price slowly as winter approaches. So you need to increase the price slowly, not directly 120. So first increase the price from 100 to 108, 8% increased, and then increase to 110, then 110 to 115. So slowly increment in price, and discount again in late January to clear inventory. And in month of January, this is the period when the winters are near to over. Now no need to hold the inventory because there is no profit on this holding inventory of winter clothes. So you can give discount again. So first discount, first high price as the winter is increasing, and as the winter is decreasing, winter season is going, then you can give discount of 10% in starting of January and 20% discount in starting of February, and you can give more discount in the next or consequent months. So this is the another option. And key takeaways, price is not a one-time event. This is the most important line. It is a continuous analytical process. So we can't fix the price in a single way. We need to analyze the price again and again and fix the price again and again. And this fixing of price depends on demand. If you increase the price of winter clothes in summers, then there is no benefit. So if you increase the price of these winter clothes in winter season, then there may be benefit, right? So this is the overall concept about your chapter 4. This is economics and analytical foundation for business under this program of ICSI. Thank you.